this year was quite active for traders of the US dollar. The US dollar index, which measures the greenback against the basket of 6 major currencies, showed the largest increase since 2015, adding 9% since the beginning of the year. Demand for the US dollar was increased thanks to the Fed's policy. The regulator raised the benchmark rate to 4.50% from 0.25. However, such an aggressive policy created a risk of a recession. Although the latest macroeconomic reports are showing the opposite, markets are getting ready for the worst in 2023. Let us find out what events will shape market sentiment early next week. At the beginning of the new year, like at the start of every month, traders will be waiting for reports from market economics. Thus, traders will learn about business activity in the manufacturing sectors of the Eurozone's countries. All the indicators are expected to decline. Currencies will hardly react to such news with a sharp movement. However, reaction to the Chinese manufacturing PMI is likely to be stronger. Experts at Market Economics will disclose the report on Tuesday. According to the forecast, business activity may drop amid the worsening epidemiological situation in China. This, in turn, will have a negative influence on the appetite for risk assets. Prices of oil and the Australian dollar, as the national currency of China's main supplier of commodities, may decrease. At the same time, the US dollar may jump as a safe haven asset. In the United States, the situation is no better. The US manufacturing PMI may also slump. However, traders will still buy the greenback as a safe haven currency. Also, on Tuesday, traders will get a reason to buy the euro. According to preliminary estimates, inflation in the Eurozone's largest economy will slacken, and thus Germany's inflation may slow down to 9% on a yearly basis amid lower consumption. What's more, prices of energy, including gas, are returning to the levels recorded at the beginning of 2022. It means that the European Central Bank may slacken the pace of the key interest rate hike or even take a pause in the cycle of monetary policy tightening. And this will reduce pressure on the economy, which may enter recession. In other words, traders will react positively to the signs of inflation slackening. On Wednesday, the macroeconomic calendar will not be rich in events. Traders are likely to pay attention to two events from the United States. Thus, the United States will disclose the ISM manufacturing PMI, which is expected to continue falling. Apart from that, traders will focus on the FOMC meeting minutes. The Fed is likely to remind traders about its plans to raise the benchmark rate to 5.1% in 2023. And we expect that the new year will be highly profitable for you. Stay tuned to keep abreast of the latest news and the financial market situation to find the best entry points. Good luck and see you soon on our channel.